Hello and welcome to another update video about HBAR. So the question is here on the HBAR chart still if we have some more upside potential before a larger top forms. And yes, I think there is still a case we can make for at least one more high as long as the market holds above the 9.8 cent level. So as you know, we usually take a look at the chart from an Elliott wave point of view, which is a sentiment-based analysis method. It tells us where key levels are situated on the chart, which, if the price breaks below them or above them, they indicate a certain market sentiment shift. Okay, so we have these, for example, in orange, these support areas. And we know that as long as we're holding above this set of parameters, above this support area here on the daily time frame, an overall bullish scenario can still be followed, at least here within this, let's say, within these parameters. And we are watching for one more high. Now that could mean it's one more high in this C wave in the yellow scenario, or it is one more high in this wave 5. And it doesn't really matter in the short term, to be honest. It's just that if it's the white count, we have to prepare for a wider wave 4 correction, all right? So let me show you. We have in the white count here a wave 2 that unfolded between March 24 and November 2024. So this was obviously quite a substantial wave 2, time-wise and price-wise. So it was quite a large correction. Now, normally in crypto, the wave 4 has a similar length to the wave 2. Doesn't need to be the same length or duration, but similar. Now you can see that this wave 4 currently is very, very short compared to the wave 2. So if this is the white count, a wider wave 4, as shown here in blue, that's just the same scenario. It just shows you that we might have to expect a little bit more of a wider and more extended wave 4 before the next move up starts. Yeah, so that would look better in terms of proportions. However, there is a way how this move up could happen more quickly. And first of all, this is only a guideline that I just showed you. It's not a rule. But there is a way in the yellow scenario, because in the yellow scenario, the C wave is unfolding in a larger B wave correction. So that's just a different pattern. I won't go too much into detail here, but the idea would be that a C wave is a 5-wave move, and it started down here in November, and we have a wave 1, a wave 2. So 1 second. This was wave 1, wave 2, wave 3, 4, and that's okay. And it could just do the wave 5, okay? Maybe not that extended, but there could be a more direct pathway higher from here. So that means the microstructure is the same essentially for the yellow scenario or the white scenario. So I'm not showing these separately, but it's important to understand, I think, that the wave 4 could extend a little bit, but the market alone will decide that. That is not so important at the moment. What is important is that the bulls turn up before the price breaks below support at 9.8 cents. So that takes us now to the smaller time frame, which tells us the story here on the 30-minute chart. Here we can see that a substantial low possibly formed on Monday, the 3rd of February. So also here the idea is, could we have bottomed on the 3rd of February when the market had this rapid sell-off? I can tell you that the recovery rally from there was a so-called 3-wave move. If it is only a 3-wave move, it doesn't really give us much confidence. However, the move down that happens afterwards was also so-called corrective. So it was a 3-wave move. So it looks overlapping. It moved in a price channel, not very strong downside momentum. And the price reacted here to several levels in this support region between 19.5 and 23 cents. And I'm watching now if the low is in. Okay, so the price could form a low in this orange micro support region. I mean, that is one of these areas that I mentioned in the beginning where prices can find support and possibly turn around. And if the price already bottomed there, then this is a potential reversal to the upside. And it would require a break above this green line as a more solid indication that a low has formed. That's located at 27 cents. You already know that level if you watched the previous videos. But we haven't even broken above the first signal line, which is highlighted here as dotted green line at 24.7 cents. So this would be the next objective for the bulls, break above that level, and then above 27 cents as well, all while holding the last swing low from Sunday, which formed at 22 cents, because as long as this level is holding, the price could be working its way higher as per this microstructure. But this is really just the microstructure where this is a small wave 2 that's currently unfolding. But when you watch the video, it might have already changed. The main takeaway is any break above the last high should send us to the next signal line. As I said, it's up here, the green line at 27 cents. And then above that level, the targets are located here on the larger time frame, 49 cents and 66 cents. So yeah, that's the update about HBAR. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.